Yeah, back to the chips. Qualcomm outperforming today after Bernstein put out a note calling it the Rodney Dangerfield of semiconductor stocks because it gets no respect. Despite stabilizing smartphone sales, more diversified revenue streams, and an already priced-in Apple headwind, Qualcomm has underperformed both the SMH and the SOX this year and in the past month. And joining us now is Stacy Rasgon. He's Bernstein senior research analyst and the man behind the Qualcomm call. Rodney Dangerfield, very 80s, very Gen X. I'm here for it. What is it about Qualcomm that you think eventually outruns what's probably investor concern that smartphone growth, particularly in the premium tier, might be behind us?
Yeah, I actually don't think that's true. And in fact, in a smartphone market that's been in decline for quite a while, premium phones have actually grown. I think over the last 5 years, the premium tier has grown at a double-digit CAGR, even in a market that has been overall in decline, which plays sort of right into Qualcomm's strengths. Like that really is where they focus in handsets and smartphones. And actually, I'm pretty positive on the continued prospect, at least for content growth, if not necessarily for unit growth in smartphones. I personally think they can probably grow their Android business high single to even low double digits in a flat unit market on the back of new AI phones and everything else that are continuing to drive content.
Yeah.
I think there's a lot of other stuff to like here as well, though. Look, I think the smartphone market, which has been in decline, does look like it's bottomed. Again, those mixed trends I think are good. There is an Apple overhang. Everybody knows Apple's leaving. They're designing them up, but it's 100% known. It's extremely well telegraphed. It's in the numbers now, getting increasing in the numbers. It's certainly in the valuation. And frankly, it's actually not that big relative to the broader earnings power. I think for folks that don't like smartphones, I think the diversification story, auto and IoT and everything else is very real. I think there's option value around PCs, even data center now, frankly. And the stock is actually really cheap. Even if I take out the Apple, roll off, it's under 14 times earnings. I think they're growing EPS double digits ex Apple. I understand that people argue there's no catalyst, the earnings just kind of does like that for the next couple of years as Apple rolls off. Like, I get all of that, but I think it's a good time at least to sharpen your pencils on it, especially in a market where lots of other things have run and lots of other things are expensive. I think it's something that at least deserves a
So which factor is more significant here for Qualcomm investors? Is it Qualcomm share gains with the likes of Samsung at the high end and that sort of bigger build-in with 5G phones? Or is it the auto business as auto transformation takes hold?
Yeah, I think for people that are looking for that longer-term diversification story, the auto story is very important. Look, auto's a real business now. It's running, close to $1 billion a quarter. It's doubled over the last couple of years, and they think it's going to double again, basically, over the next few years. I think the smartphone story, people do think about share. And again, I do think that Apple overhang, for better or for worse, continues to weigh on it. And not that people don't know, it's people just look at it and they say, well, I don't see any catalyst until it's gone. I personally wish Apple was a zero tomorrow. At least we can stop talking about it. I think 27 and beyond actually starts to look really, really good. By then, Apple will be pretty small. You can actually see the nice things that are going underneath. That sounds like a long time away, but it's really not. It's 18 months. Especially if you've got like a horizon like 1 year out. I mean, this is probably the time to at least start sharpening pencils on it, I think.
I mean, the semi-trade more broadly seems to be doing pretty well right now, Stacy. And we got some positive or upbeat commentary from everyone from TSMC today to AMD on semi, also trading higher when they put some, updated forecasts out as well. What is your takeaway more broadly on the group, and how does it speak to the economic backdrop or maybe performance despite the economic backdrop?
Yeah, you bet. So, the sector got completely whacked like around Liberation Day, right? And it's had a really strong run after that. And I think it's a few things. One is certainly you do have the postponement of the tariffs. And, we'll see what happens there. We're all waiting for like the 232 investigation to complete. And so we'll see what awaits on tariffs. But in the meantime, you had some reprieve from that. I think in some of the more cyclical markets like industrial, there's been talk of bottoming and even beginning of cyclical recovery. And there's a controversy right now, like, is that real or is it like pull forward in front of tariffs? I don't think we know. But for now, like, some of those numbers are getting better. And I think very importantly, the AI trade seems to be back on like in spades. And that's actually like carrying a lot of the space along with it as well. So, I mean, you combine all those things together, maybe it's not so surprising that the sector's been pretty strong over the last bit of time.
All right.